Hey guys, Angel here with the Bullish Bears team. I am making this video today on how shorting works. So the market is a tug of war between buyers and sellers, and so sometimes sellers are going to take control and stocks are going to tank. And there is a way to make money doing that. It's just something that you have to learn. Many times, especially as new traders, when you think of trading, you just think about buying and selling, and shorting is a little bit different. So typically it's buy low, sell high, whereas shorting is sell low, buy high, or sell high, buy low, which might not make sense, but I have the definition of shorting up here with Investopedia, and short selling is defined as the sale of a security that the seller has borrowed. A short seller profits if a security's price declines. In other words, the trader sells to open the position and expects to buy it back later at a lower price and will keep the difference as a gain. Short selling may be prompted by speculation or by the desire to hedge the downside risk of a long position in the same security or a related one. Since the risk of loss on a short scale is theoretically unlimited, short selling should only be done by experienced traders who are familiar with the risks. So don't let that scare you, because if you use proper risk management, you're not going to lose everything. So if we head over to Thinkorswim. So with Thinkorswim, they don't have a ton of shares to short. This is going to be a tongue twister, I can already tell. But if you have another broker like Interactive Brokers, or you can research it actually and find a broker that works with short selling. So if you want to short a stock in Thinkorswim, you just need to look over here at these ETBs, because ETBs are easy to borrow, HTB is hard to borrow, and this NTB is not to borrow. So let's take a look at GSM. So this is the 1 minute chart for today, and you can see that it opened below the EMA and it just went down. So it all depends on your style of trading. So because this stock is easy to borrow, you could have right clicked and you could sell, or you can sell custom. You can have it with a stop, or one cancels the other. So you just want to practice that. So this is going to give me troubles. Okay, so I'm going to actually change it to a pointer right now. So you could have shorted this stock down. And so let's say you let the first 1 minute candle develop just to make sure. You see that it starts still below the 9 and keeps going. So you could have got somewhere in here, or you could have waited for that to close and then gotten in on this candle here, which would have been 241. You could have wrote it down to this. You can see that it's hammering out a base. You could have gotten out at the close of that hammer, which is 203. So 241 down to 203 is actually a pretty nice profit. And if you just are pretty sure that this is going to go down depending on your experience or your risk level, and you decide to get in as soon as it opens and short it down, you could have wrote it from 260 down to even close down in here. If you didn't want to wait to see how that candlestick closed, you could have closed under $2. So what you would do to short is you would sell it, wait for it to go down, and then buy it back. So that might sound a little bit strange, and you may be wondering, if I sell shares I don't own and then I buy it back, am I keeping these shares? But what you do is you go to your broker and you borrow them. So they take those shares from someone else and they give them to you. And as price goes down, when you decide to cover your position, you're going to buy them back, and those shares revert back to the broker. So you get to keep the difference from the time that you sold till the time that you bought. And so let's actually take a look at a stock from our watch list. So we had the bearish play, or the bullish play, on BIOS. Today it was, actually, let me head over here and to see, it was at or above 370. So you could have gotten in. I would have waited after this all messy stuff stopped. 373, wrote it up to 384, made about 11 cents. And then you could have seen this is starting to go down once it broke below the 9 EMA. So the 9 EMA is going to be an important buy or sell area of day trading. So once you see that it broke and then that it tested again and failed, you could have decided to sell. So you could have sold right at this 9 EMA at 379, or you could have waited for the third candle. It's always good to make sure that you get confirmation, just because you don't want to get into a trap, because there are going to be market makers and whatnot that are going to try and trap new traders to take advantage of them and make their profits. That's kind of what we all do. So if you got in, let's say at the top of this candle, 378, you could have rode this all the way down. You can see that it never crossed back above the 9. So you could have rode it down until you saw that it started to get back over the 9, maybe to 364. So what did I say that we're 374 to 364. So you could have made 10 cents. So as a trader, sometimes it's just, let's see, yep, and this one is easy to borrow. So you may not be making 50 cents every time. You just have to look at the scanners and see what the scanners are showing you, and also what the market is doing. So if you've been paying any sort of attention to what the market is doing, and I'll pull up the S&P futures. Oh, I have it on the 1 minute, so I'm just going to change that to the daily. So if you had pulled that up, and you would have seen that on days like these big red candles, finding a bullish play is going to be a little more difficult. So what you're going to want to do is be able to know how to short. You don't want to just hamstring yourself into being able to trade one way and one way only. You have to learn the different strategies if you want to be able to be a consistent trader day in and day out. Now, if you don't want to do that, then you don't have to. If you're only comfortable trading on bullish days, then maybe lately hasn't exactly been a great time to trade for you, but that's okay. Now, there's another way. Let's say you love Thinkorswim, you don't really want to have to short all the time. You can still short these easy to borrow stocks. Is there another way, say for maybe the high price stocks, so like stocks like Apple? And I'm going to go to the 1 minute just for today. And of course, it's just going to take forever to load, so it likes to do that to me sometimes. Seriously? So maybe we won't go to Apple. Oh, here we go. So Apple, you can see that you could have shorted it down, but here, once it got down below that 9, which was 173.51, and you could have wrote it all the way down to 171.24. You could have gotten somewhere in this wick if you were so inclined. So how would you be able to short a stock like that, especially if you don't have a huge count, and maybe getting 10 shares of a stock at 170, where did it go? 172.27 isn't exactly feasible. Well, you can trade put options, and put options are just like shorting, but they're a whole lot cheaper. So you can see that if you had decided, oh, like right now, I'm going to short this stock down because I believe it's going down. I took a look at the 1 minute chart. It's starting to close below. Oh, look at that. It's going down. It's going down. So it's at 173.79. So I think that it's going to go down to, now these are a little bit larger, 172.50. So you could buy the stock, which controls 100 shares. You could buy this put at $1.82, which would be $182 that you're putting up. So instead of buying 10 shares at 173.82, you could buy one options contract at $181. And then if you're day trading that, because typically shorting is day trading, you don't hold overnight, you can see it has a lot of volume and a lot of open interest for this. So if you're shorting this down, you can buy like the same week contracts, especially if you're day trading, and that can be your version of shorting with options. So there are options and different ways and strategies for you to trade no matter the market, and shorting is a great strategy to learn, especially if you want to be able to make money when there is going to be bear markets or corrections or recessions or whatnot, because what goes up must come down, and the market always trades in cycles. It's never ever going to always continually go up no matter what anyone says, because it gets overextended and it needs to take a breather. So whether it's a bear market or a correction, even a correction, you're going to have stocks going down. And even if it's just for a couple of weeks, you still, if you want to be a profitable, consistent trader, then you want to learn the different strategies that you can use to make money in any market. And if you want to read more about it, you can head over here to our blog post on how does shorting work. And you can learn more about shorting and why you short and the risks. And it can be risky. So you need to learn the patterns and support and resistance, because like Investopedia said, theoretically, you can lose an infinite amount of money just because if a stock is going to go down, it can only go down to zero. But if you're expecting a stock to go down and instead it heads back up, it can head up forever and ever and ever and just take everything. And that's why we stress proper risk management, why we stress stop losses. Even if you just do a mental stop loss, you have to be very good at trading to do a mental stop loss, especially when you're starting out, because it can get emotional and it can get a little scary. And sometimes with high float stocks, you'll get stopped out before it goes and heads down. So just be aware of the risks, be aware of the patterns, know support and resistance, especially if you're shorting, because you want to short at resistance. Instead of buy at support, sell at resistance, you're selling at support, buying. You're selling at resistance, buying at support. So shorting is a little bit backwards. And if you want to learn more about it, you can head over here to our stock market community. That way, if you have any questions about shorting, you can post them in there. And there's traders from all over the world that can answer questions. People are in there all the time. And if you are a member, which would be over here, if you subscribe, then you can be in our trade rooms and you can be watching live action traders as it's going on. You can read what they're saying. You can ask questions. People in the Bullish Bears community are extremely helpful. And if you like this video, just give it a like, a share, and subscribe. And I hope you guys enjoyed this video, and I'll see you all later.